Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, February 13th, 2023. Welcome back to the podcast, Sekido-san.
Good to be back.
Good to have you. So the nomination process for the next BOJ governor as well as the deputy governors has certainly taken longer than expected. As I recall, I think you told us last week that they were supposed to come out on the 10th. Here it stands the 13th in the U.S., the 14th in Tokyo, and we haven't received the official nominations. Help our listeners better understand the delay as well as the implications of the presumed nominee.
Former BOJ Monetary Policy Board member Kazuo Ueda will reportedly be nominated as governor of the central bank, and a former financial services agency head, Ryozo Himino, and current BOJ assistant governor Shinichi Uehara as deputy governors. The formal nomination will be made on February 14th, 11 a.m. Tokyo time. A February 6 media reports had indicated that current Deputy Governor Masayoshi Amamiya will be nominated as governor, but he reportedly rejected the proposal. It appears that the Kishida administration was focused on continuing the Abenomics policy of the former prime minister and was forced to make another offer. The new names were likely decided to meet the demand of the Kishida administration, the Abe faction of the LDP, the party's biggest faction, the Ministry of Finance, and the Bank of Japan. The Abe faction is still going strong even after the assassination of its leader, but Prime Minister Kishida wants to show his own new style of capitalism. So Uehara-san is neutrally selected. 15 years of the BOJ alumnus was averted. Over the near term, the changes to monetary easing will likely be gradual. Revising the government BOJ joint statement could become more difficult. This is because the nomination process has taken longer than expected. Moreover, continuing monetary operations is not easy. Fixed rate JGB buying and pooled collateral fund supplying operations are Pandora's box. Also, given the risk of yen weakening, if the U.S. Federal Reserve keeps hiking rates, changes to Japan's monetary easing prove difficult for the new BOJ governor. The nominations for the upcoming BOJ leadership should be official when this podcast is published. The nominations were slow in being made, but we expect the diet approval process to be quick. I plan to cover the details in my next podcast out of my Nagoya Roadshow. We maintain our view that the yen rates will keep their upward bias and the yen basis to keep its rising bias because of the uncertainty surrounding the BOJ, as investors avoid JGBs at the margin.
That's interesting. I mean, so simply put, but makes a lot of sense. So you have uncertainty in Japan. So Japanese investors, perhaps invest abroad at the margin. International investors invest a little less in Japan at the margin. Both those things are yen rate, positive, meaning higher rates, as well as basis wider events. You also make an interesting point that the Kishida administration is looking to put their stamp on the BOJ in line with the new style of capitalism initiative. And we've actually seen, in terms of flow of funds, we've actually seen that with a pretty decent pickup in foreign bond buying from Japanese investors. And in the middle of all this focus on the Bank of Japan governor and deputy governor nomination process, the Japanese Ministry of Finance released the international transaction and securities data for January. So what does that data suggest investors were doing amidst all this uncertainty?
Data released by the Japanese Ministry of Finance on February 8th shows that the Japanese investors purchased a net 3.2 trillion yen overseas securities in January after selling a net 226 billion yen in December. Details shows that the Japanese investors purchased 1.6 trillion yen foreign stocks and investment funds, 1.1 trillion yen medium to long-term foreign bonds, and 439 billion yen short-term foreign bonds. In medium to long-term foreign bonds, the buying was concentrated among pension funds who purchased 1.3 trillion yen, securities companies who purchased 957 billion yen, and a Toshin investment trust who purchased 550 billion yen. In contrast, Japanese banks sold 368 billion yen, while lifers sold 1.1 trillion yen. Net purchases of foreign stocks and investment funds were split across 1 trillion yen for pension funds, 341 billion yen for Japanese banks, and 117 billion yen for Japanese lifers. Then the foreigners sold a net 6.8 trillion yen of Japanese securities, including 4.2 trillion yen medium to long-term yen bonds and 2.8 trillion yen of short-term yen bonds. In contrast, foreigners did purchase a net 265 billion yen of Japanese stocks and investment fund holdings. In January, when the BOJ expanded its pooled collateral fund supplying operations, controlling yen swap rates, foreigners stepped up their disposal of JGBs and acquisition of Japanese stocks, while Japanese investors increased their purchases of foreign stocks and foreign bonds. As Japanese banks and lifers moderated their selling of overseas assets and shifted to net buying, the amount of foreign securities purchased by Japanese individual money via securities firms and Toshin trusts were striking. Foreigners sold JGBs and did some restructuring of their Japan stocks.
Yeah, so exactly the point you make before, where Japanese investors buy some additional foreign bonds or foreign securities in the margin, and international investors stay away from Japan a bit. I would point out that the Japanese investors, as you said on this podcast, as well as in your research, have sold a tremendous amount of foreign bonds. During calendar year 2022, they were net buyers of foreign bonds in January. It's like a pretty big shift there. Weekly data also shows a big shift, and we've actually seen a pickup in foreign bond purchases through our franchise. I think the question remains, will they continue to be large buyers of foreign bonds? I think I'd argue that a lot of the reasons that Japan originally went outside their preferred investment habitat of JGBs, really aren't there anymore. Obviously, yields are higher in JGBs than they have been the last few years. So it'll be sort of interesting how they play out. And I was wondering if you could maybe talk us through a little bit of that. I'm curious how you expect both Japanese investors and foreign investors to react, to these developments with the new BOJ governor, potential changes in policies, over the coming weeks and months. So what are the sort of things that our listeners should be watching for, Sekido-san?
Mm-hmm. In 2022, the Japanese net selling of foreign bonds amounted to a huge 25 trillion yen. In December, net selling of medium to long-term yen bonds by foreigners was also a huge 6.8 trillion yen. In the JGB market, the JGB yield curve steepened and became more volatile. Over the near term, market participants will need to carefully monitor the policy stance of the BOJ's next governor regarding, firstly, yen yield curve shape, and secondly, changes in BOJ's monetary policy operations. As well as, thirdly, how Japanese investors replace the G10 bond assets they disposed in 2022. the yen basis will be prone to widening after the BOJ governor is appointed, as the relative attractiveness of yen rate products is increasing. Not all Japanese global surplus funds will return to JGBs. There is a possibility that the Japanese investors' G10 yen bond investment basis hedge trading behavior will be less continuous. Therefore, the close global financial flow monitoring is indispensable. Foreigners are likely to return to dollar bonds. Global pension funds may actively continue to engage in alternative assets, such as Japanese real estates, with yen basis arbitrage trading. We see an upward bias in yen rates as both Japanese and foreign investors await the new BOJ governance bias. The yen basis will have a widening bias as Japanese investors replace restructuring assets. We plan to promptly adjust our yen rate and yen basis forecast depending on the reactions to domestic and foreigners, non-linear risk factors such as unified local elections in April and cross-border yen investment flows.
So point well taken. You said the relative attractiveness, despite the relative attractiveness of JGBs increasing, not all funds, not all maturing or maturing funds or sales of foreign assets will be repatriated domestically. Some of that will just have to stay outside of Japan, which is a very good point. And we are talking about a very large investment pool, so there's sort of plenty of yen to go around, if you will. But why don't we wrap things up with your outlook across yen rate, spot dollar yen, and yen basis markets?
Dollar yen has risen primarily on the dollar strength. Over the near term, we expect the U.S. data, CPI, any comments by the Fed officials to support the stronger dollar. Any support for weaker yen will likely be limited. We see a dollar yen trading in a 3 yen range between 130 to 133 with a bullish bias. Upward stresses on the belly and long end of the yen swap rate curve persist. Over the near term, 5-year JGB auction is planned for February 16th. Pooled collateral fund supply operations well tests the BOJ's capability to manage the yen yield curve. The incoming BOJ chief's policy stance will not be completely clear even once the nomination is made, and a combination of rumors and facts will likely obscure a clear view over the near term. We think this could put upward stresses on the long end of the yen yield curve. We maintain our view that yen swap rate will keep their upward bias and a steepening bias. The yen basis curve has widened. Ministry of Finance weekly securities flow data shows that the Japanese investors bought a net 679 billion yen of overseas securities in the week of January 29th to February 4th. This included net buying of medium to long-term foreign bonds by 1.1 trillion yen against the net 543 billion yen of foreign stocks and investment fund holdings unloaded. Meanwhile, foreigners bought a net 951 billion yen of short-term yen bonds and 231 billion yen of medium to long-term yen bonds, but sold a net 18 billion yen of Japanese stocks and investment fund holdings. Japanese and foreign investors alike have been rebuilding their G10 bond positions markedly. We think rebuilding of foreign bonds holdings by Japanese investors is dominating, and the yen basis will turn from neutral to widening.
Okay, so we've got a bullish on spot dollar yen, negative on JGB, so an upward and steepening bias on the yield curve, and widening on the basis for reasons previously discussed. I'm also looking forward to that update, on the next podcast following the official nomination, presumably of Ueda-san today in Tokyo. So thanks again. Plenty to talk about today. Looking forward to next week. And thanks again for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.